Please request the partner at C14 Capital, Nruthya Madappa, to kindly come and join us onto the stage, please, with a big round of applause. One of India's most respected early stage funds, Nruthya brings in research-driven lens to some of the most important trends shaping India's consuming behavior. She's right here. One more time, a loud round of applause before lunch. Let's go.
So it's us, this presentation and then lunch. Mine, unfortunately, will be a little bit on the absolute opposite end of the spectrum from Razdan's presentation. A lot of slides, and we'll get through them really quickly. A lot of data, and if you ever need me to double-click on anything, let's get into it. So one of the things that we've observed over the last decade of investing at 314, and we manage over $1 billion in assets, invested in over 120 companies, one successful IPO, 2 new consumer ones coming up in the next 12 months, several unicorns. What we've observed is that in India, especially looking into the next decade, we are the largest theater across the world for tech-driven value capture. Just keep this in mind, and the next 15 slides that I will race through will just go deeper on why this is true. I'm sure you've heard this, but I really want you to understand what's behind this, right? So India's doubled its GDP in 10 years. So very few times generationally, like China, there is the current generation that lives there has seen this sort of GDP doubling twice or thrice within their sort of lifetimes. Within yours and my lifetimes, we will see this happen 3 times as well. It's happened in the last year, it happened over the last 3 decades, it will happen within the next decade as well, much faster. But this is just the wrong takeaway, that we just doubled. What we did, and the right takeaway, is that we did this with an underdeveloped consumption layer. The growth so far has been the warm-up. It's what's coming from here is what we need to all in this room prepare for. Goldman's study gets quoted a lot, 20 trillion by 2050. But what gets missed is that's literally the 3rd largest economy in the world, built almost entirely on a domestic consumer who today still doesn't yet exist fully at scale. Still doesn't yet exist fully at scale. This is a very big thing that actually gets missed, and I'd really like you to. This is news that unfortunately hasn't made the headlines the way it should, but we've almost eliminated extreme poverty. 250 million people, several nations put together, were pulled out of multidimensional poverty in a decade. The wrong question is poverty falling? The right one is, where will these 250 million people go? What will they do? They didn't disappear. They're going to become consumers. They will become your new TAM. We talk about this, that we have a very young population. The median age is 28. Put it against the other countries and you understand how staggering this is. We thought we had way too many millennials a decade ago. I now think we have way, way too many Gen Zs, and that will only continue to catch up. 377 million Gen Zs, that's larger than the population of the United States alone. And India's consumption story today is at an inflection point. 33 million Indians joined the global consumer class this year alone, 2024 actually, that was larger in 2025. By 2030, India is the world's 2nd largest consumer market at 773 million people. That is bigger than the entire West combined. Pause on that. Bigger than the entire West combined. The only one larger than that by not that much will be China. And here's a slide that most people just skim past. 61% of our GDP today is already consumption, but look at the retail bar. 92% of this is online. We spent a whole day today talking about the most remarkable brands that this country has seen, all emerged over the last 5 years in the decade. They all sit within that brand.com, which is about 1 to 2% in this country. Everyone in this room has been told that India is going digital. The data still says that India is still 92% offline, which means the opportunity is massive across both. It isn't just that single percentage point improving, but what does offline retail look like? And we have distinct advantages and tailwinds, right? Per capita income, across the board. We have per capita income that's doubled in the last 7 years, the 2nd largest smartphone market. Again, what's really interesting is the type of consumer market coming. 1.4 million people, digitally skilled employee base, largest OTT market, 6th largest OTT market in the world, 35% of our technology workforce in MNCs. It's a very, very different looking India today. And this is the very key thing. $4,000 US, $3,500 to $4,000 US is a spending inflection seen globally over. When a country breaches this, this specific point, $4,000, consumption explodes. We've seen this across Korea, we've seen this across Japan, we've seen this across China. We're arriving to it about 2 decades after China, but we're finally there. We're finally breaching the $4,000 mark, and what this means for India is truly tremendous. And not only have we arrived at this, what's also happened is India's consumers arriving at when the infrastructure for access is already there, which is payment networks, UPI, ONDC, 1 billion smartphones already in place. So the infrastructure for the discretionary surge has been built, and the income is finally catching up. On top of this, Indian production is, of course, going global. It isn't just consumption. What we're building here today is being shipped all over the world. India today exports more software than Saudi Arabia does oil. And a large number of products across several industries are going to soon catch up there. India's equity story also is at scale today. We are the 4th largest market cap in the world. And the household balance, we've now gone from being savers to investors. It's a pretty market shift in how we're even thinking about consuming financial products. India Inc. today has achieved record profitability, at 15% of GDP. Are we on the right slide? Sorry, I think we're a slide ahead here and a slide behind there. Okay, so yeah, we are at record profitability. This is also very interesting, another chart that doesn't talk about. This is earnings per share across China and India, and you see the divergence is really clear. We have very, very formidable companies in our public markets that are completely hyper-optimized around earnings, around profitability, around EBITDA. And you see that divergence happening on what state-run enterprises and what they're optimizing for and what like true capitalism in its finest form, optimizing for profits looks like. And we're seeing one of the most formidable public markets emerge. Similarly, you've seen the whole slew of public market companies that have emerged out of just the consumption base. We've seen it across even other sectors like BFSI, B2B software. All in the last 5 years, we've seen new age tech companies go to market and do so quite successfully. Today, we have enough companies that are new age and public to actually have an index of its own. This is our friends at the Rainmaker Group who has something called the TRMG index, and they measure every single listed new age tech company. And what you see is they trade at a 1.6 premium. And that premium isn't unwarranted. It is because they grow at 1.6 times the rest of India Inc., right? Again, similar story. I think what's really interesting is also we've had a decade of consumer IPOs and they continue to thrive both in scale and number. And what we've seen is each of those companies that did list over the last 5 years have continued to compound. They're from debut to dominance across the board. And they've attracted significant amounts of capital. It isn't just a day one pop story, but you've seen long runways and the growth continues to stay in gear across all of these large ones. Now, with this context, how should we think about sorry. It's not working. Okay. Well, they figure this out. I'll tell you what we do at 314, right? All right. What we've been very interested in understanding is where this next decade of compounding will actually be built. And we're particularly focused on 3 questions. How will income growth and the reshaping of India's consumption pyramid translate into concrete opportunities across staples, health, beauty, home, experiences? Second, how are the consumer archetypes evolving? And third, which operating systems, from distribution to logistics to credit rails to brand, data, AI, which we just talked about, will separate the really enduring franchises from the next cycle of short-lived growth stories? Our models has always been intentional value creation, and this is something that we take far more seriously than the number of unicorns in our portfolio, which is relatively high for a young venture firm. But we, in the last, and each of the companies that are listed in like 100 to 200 million, the average amount of time got taken to get to that kind of revenue level, this is USD revenue, top line, is about 5 years. So in 4 to 5 years, we're seeing compression of timelines to the kind of scale and revenue growth and profitability growth that are compressing in ways that I don't think anyone would have underwritten for India even a decade ago. So again, a few examples of the companies we've been with right from the seed, but what's very interesting across each of them is that each of these investments received in wisdom at that point, right? It was a bet against what was standard wisdom. And India showed us that there was actually markets in places that, if you looked at playbooks elsewhere, would not be something that you would bet on, whether it's Darwin Box, Licious, Cuckoo FM, etc. And I'll be able to get into a few of these stories in a little bit deeper while we look at some of these archetypes. So looking at the income pyramid itself, how the money moves, how it's moved till today, and how it looks to move over the next decade. We have 4 cohorts, 4 types of wallets. Bharat Core, which is under 1.5 lakhs in income, value upgraders 1.5 to 5 lakhs, urban aspirants 5 to 10, and affluent India. And what I want you to see in the middle is what's highlighted in yellow and just how the household numbers are going to move across. Okay? The headline most people take away from this is that middle class is growing, of course. Come on, I'm not going to stand here and tell you something you already know. The thing that you should actually look at is what I began with, that Bharat Core is shrinking. You're taking 15 million households away from that, and every other single tier is growing. The pyramid is officially becoming a diamond, and that's forming in the next 10 years. It's not in the next 30. This is dramatic. Again, I'm just put some of these things at scale. Some of these are the populations of entire countries, right? Let me again put this. This is 84 million households will move up by 1 tier by 2034 in under 10 years, in the next 8 years. That's the entire population of Germany changing what they can afford in a single decade. 3 migrations, 3 opportunity spaces. We'll walk through each one of them quickly with some examples, but this is what our research focused on. When this shift from in income happens, how does that reflect on confidence, time, budgets, volume to value? Like, how does this look like? What do households look like? What do these customer personas look like? The first migration we've seen, again, this is the Bharat Core to value upgrades. There's a ton of things we can focus on. But let me give you a few examples of how we expect over the next decade this to sort of translate. From loose to logos, essentially 95% of pulses in this country are still unbranded, 85% of flour, 70% of spices. I know we've been talking really fancy beauty and personal care brands and brilliant like household products, etc., but 95% of India's pulses are still unbranded and sold loose. Most of us are looking for the next D2C hot brand. The bigger prize might actually be in the next branded atta. So who's looking there? I know we just had ITC before. Don't want to send any new founders after your markets, but they're coming. Hyperlocal playbooks in action, right? What does building for India really look like? Not just across price, but across branding. Do you put a bright orange sting against Red Bull packaging? Do you think about the pricing of it differently? How does Cuckoo FM position itself in pricing and content and marketing against Spotify? How at the very core of product, price, marketing, branding, narrative, customer, etc., on all of these different levels, do you build specifically for India? And these are companies that done it extremely well. Do not import the global price point of playbooks. You have to re-engineer it for the Indian wallet and the consumer. And every single category I named, the names on the right, they're all unicorns or near unicorns today. This is another very big thing, right? So Indian consumers, you have to think about it as 2 barbells, the opportunity. The opportunity is in improving access, okay? And then it's in this idea of wanting upgrades and aspiration. So they're 2 barbells. But what we've got now, what is over the last 5-6 years, content has become that incredible bridge. 900 million internet users, 350 million transactors. That gap between 900 million and 350 million is the next decade of the consumer internet. Meesho at 5.5 billion GMV is the proof. Okay, shoppable content plus UPI plus autopay is the new acquisition stack. Performance marketing in English is dead in this cohort. So how will we reimagine how we reach them, how we speak to them, and then how we, of course, convince them to buy and try new products, and what will they buy? These are all the beautiful questions of the next decade. So India's next digital gold rush is beyond the tier 1, and I'm sure there are people who have repeated this to you all day. 70% of digital users today are outside the metros. They consume the same OTT, the same socials, the same payments at parity, by the way. But monetization is still concentrated in the top 9 cities. Doesn't mean it doesn't exist elsewhere. But the under-monetized user is not a problem, it's an opportunity. We invested in Cuckoo FM about 8 years ago. Nobody saw this coming. This was, again, founders obsessed with a specific Indian consumer, completely out of light for us. This was not a consumer who in any investor's belief, paid for any good digitally, forget, bought an online subscription for content, etc. And Kuku turned this on its head, right? Today, the company is north of over $200 million, is thinking about their filing and their IPO soon. It is truly a digital content, story that has blown the minds of every major OTT platform or content platform around the world with the way that it has executed and built so specifically for this consumer and done it so successfully in such a short amount of time. The flywheels are not accidental. It's because you really focus on a customer that nobody's building for. And this is across the board, right? You're talking about the type of content that they went after. They started with long form audio. They're now, of course, in micro dramas, etc., and have scaled that massively. And under that, they were one of the first few adopters of the AI engine. One of the things that people really underestimate about why Kuku, Pocket FM, and all of these companies, the content companies built out of India, are scaling the way that they are and will hit profitability at levels the Netflixes and Hulus, etc. of the world will not see, is these companies own over 95% of their content. They own it. They're not paying for it. And they actually produce it exceedingly cheaply and exceedingly efficiently. The thing that kills you in a content business is actually the cost of licensing and the cost of the content you put on your platform. It's not anything else. Okay? And they've upturned that model. In order to deliver value to their customer, they had to rethink how this content was created and at what scale you would build it, even when it's deeply personalized to the customer. Again, other opportunity spaces here, right? From value to values. I think Raza was talking about, India is a value customer. That's the shift you're going to see. It's going to go from value to values. More things are going to matter than just, how much value am I deriving from this? So where is your food coming from? What is the story behind it? Does your proof breathe the puff at all times? Is there identity included in it? Is there a way that I'm able to resonate with the product that I'm consuming, the brand itself? And of course, packing and price fit, etc. And let me give you examples of that, right? How premium offline is actually really surging. There's less than 10% vacancy in all grade A commercial real estate across retail today. So you can imagine the kind of demand there is and the footfall that sees. 45% of brands use hybrid paths. 58% of consumer journeys are purely offline, specifically in things like jewelry and otherwise. 70% expect entertainment and an experience as a service when they walk into your offline store, right? Beauty, of course, this is one we've seen this evolution happen so rapidly. In the last 5 years, we've gone from a customer who wanted to be educated about niacinamide all the way to today demanding performance in a way that you've never seen before, right? You have a vigilant and decisive consumer who has evolved over the span of 3 to 5 years. It's not even over a decade in this category. So then as a consumer beauty brand, how should your portfolio be shifting? How should your messaging be shifting? Can you even keep up with a consumer base that is evolving this quickly? Parents, very, very large category in this space. Again, extremely discerning, definitely zero compromise. When it comes to your children, there is no compromise. You might compromise on what you put on your skin, but this is something. And this is an opportunity that a portfolio company of ours called R4Rabbit identified, that we needed products and we needed messaging and we need to innovate products in collaboration with parents. And they did that. They built extraordinary product fit. 85 to 90% of new SKUs every new SKU, 85 to 90% of new SKUs are deeply, deeply successful for this brand because they have a structured product development engine that is co-built with parents and their customers, right? And they have multi-channel coverage, of course, and brand equity and advocacy, and they do all these great things, which lead to obscene ratings in a trust deficient, extremely vigilant, decisive customer base. To have 4.2 on Amazon and 85% of your customers thinking you're an international brand when you're built out of Ahmedabad, it's truly remarkable to be able to accomplish that in such a difficult category. But it's about getting and reading your customer really right, being there first and keeping that conversation open all the time. The third opportunity space is the move of urban aspirants to affluent India. Here's where we're talking upgrades, and upgrades in a big way, but upgrades not just in the way that you imagine. It's just not how do I go for luxury and how do I look at things that make me look better. It's prioritizing a whole suite of different things. Okay, you'll need to give me at least 5 more minutes. So again, wallet is tilting discretionary across different sectors. And we have a company, for instance, called Lumio, and this is a really good example of how you think about what does upgrade mean, right? So in this country, we have Most people have 32-inch TVs. Actually, 220 million TV households, less than 25% have a connected or smart TV. So country is ripe for upgrade, right? But upgrade, what do we think when it's upgrade? Bigger TV, Sony, larger thing, beautiful display, etc. But how many of us have been stuck with like Netflix taking a minute to load on our extraordinarily expensive TVs? How many brands, global brands, have even optimized for processing power? How many have optimized for sound? Because we just buy a TV and we buy a home theater system. So these guys asked those questions no one were, and from first principles, manufactured a television that hit all of these points that the whole industry decided to ignore for over 2 decades. And they built something that was smart TV first, built on processing powers and speed that is 2-3x faster than the highest flagship models across the biggest brands in the world. Right? And of course, they've seen insane customer love. We've seen this across travel. This is a company, again, Elevas. Very interesting because it isn't just the accommodation, is 40% of what they make. They are able to cross-sell experiences, activities, dining, everything. They understood that India likes to travel in larger groups. They like to do longer stays, and they like everything to be managed. If that's the case, how would you reimagine a travel brand? It took a team that built literally Make My Trip from grounds up to reimagine what travel would look like for India. And they're, of course, being rewarded. So, okay, I'm going to skip this entire section. It's a big section. I will give you the whole thing. But some of the things that I want to leave you with, one very important thing, for instance, a consumer that's really emerging is the woman, right? Women are seeing wealth for the very first time. 33% of home loan borrowers for the first time are women. 46% of platform car buyers are women. Investing, you're seeing women increasing in representation across most trading platforms. And there's rising internet usage. 60% of new internet users are women. So how are you thinking? And they're the CFOs of the households, actually. You know, they make most purchasing decisions. So how are you buying for them? How are you thinking about whole families? How are you thinking about, you know, the silver economy? How are you thinking about tier 2 youth? By the way, tier 2 youth, 66% of gamers come from non-metro cities. Okay, this is something I want to leave with. They spend 12 plus hours on gaming, more than OTT or social media. So if you thought gaming was a low value, low wallet sort of play, you're completely wrong. You're not looking in the right places and you're not looking at the data that is so dramatically different from anything we've seen anywhere else in the world. And of course, a lot of really great brands are not just spending on customer acquisition anymore. They're deepening their retention funnels in ways that you've never seen before. They have fantastic loyalty programs. Lenskart's Gold is legendary in what it's been able to accomplish. These are always on subscriptions that customers willingly pay for better experience. This is what upgrades look like, right? Silent upgrades. So quickly, of course, you know, it isn't your brand craft, your narrative sets the pace, but it's everything after that. How much you vertically integrate, how you think about your supply chain and risks around that, unit economics, how you think about flattening, like deepening your retention and frequency curves, and then building towards an Indian IPO, by the way, which is one of the toughest markets to list in globally, because the bar for what a great company is extraordinarily high in them. And tech is the next lattice of evolution. We're going to have a very different future in 25 years. Energy could be nearly free. Expertise will be free. Labor will be free. Global trade will be instant and autonomous. India is going to be the default developer platform for the world. AI agents, which we talked about, will swarm the internet. Health will be daily augmented. This is the crazy thing. India's overtaken the United States already as the world's largest user base for ChatGPT. How they will discover your brands, everything will be different. GitHub, again, 57.5 million developers in India by 2030. These are not things happening on the sidelines, right? And they will have impacts across the entire way that you build and, you know, create brands. So now one of the things, the last things that I want to leave you with is just this. Right, here's who's going to win. Not the operators that are chasing every cohort, every customer. It's only going to be the ones who pick a single Indian consumer and serve her with the obsession of someone who knows she will not and has not been served by someone else. It's not the brands optimizing for the quarter. It's the ones who are building for the household that doesn't exist yet. You know, DINKs and whatever more like acronyms that are going to evolve over the next 4, decades or so of what our households will evolve into. The founders who are waiting for the market to mature will not win. The ones who understand that the market is being made by them will win by the choices that they're making. The next decade in Indian consumption will be won by founders who are unreasonable about 3 things. The depth of their understanding of one Indian, the discipline of their unit economics, and the size of their ambition of what an Indian brand can become globally. Okay, 1 billion customers are about to be wealthier, more demanding, more discerning, and more deserving of better than they have ever had. They're not waiting for the West to send them brands, and they're waiting for us to build them. So let's build them the brands that they deserve. Thank you.
Thank you, Nruthya. We would want you to stay back on the stage. May I please request Sandeep Agarwal, our chartered member, Thai Bangalore, to kindly come and present a small token of gratitude from our side. A big, big round of applause for Nruthya, please.